What's up, Kirby? So, news just came out. Berkshire Hathaway is sitting on $325 billion. So, my question to you is, I know there's a lot of stock traders out there and such that follow the patterns of Nancy Pelosi and, some of, other people in the market. As an investor, are you paying close attention to every movement that Warren Buffett takes, or do you just see this as, this is his own strategy and it's nothing to be worried about?
Understand this and hear me well. Warren Buffett forgot more about the stock market than I know. Forgot more than I know. Uh, when Warren Buffett is investing in a singular stock, if I'm not already in the stock by the time he's investing in it, I don't go chase it because that's what everybody else is doing. When Warren Buffett makes major changes to his portfolio, it's usually because of a micro, not a macro reason. Micro meaning the whole economy or a larger part of the economy, micro meaning certain sector. When he's doing big portfolio shifts, it's because of the macro. M-A, not M-I. Uh, and I do pay attention to those. Warren Buffett sitting there on a lot of cash, I pay attention to it because what it's going to do is he's sitting on a lot of cash because he's been through probably every economic cycle that there's ever been. He's damn near 100 years old. Any economic cycle that's went on, he didn't probably seen it, right? Great recessions to COVID. He goes to all those. You know what I'm saying? I mean, Great Recession, Great Depression, COVID. He done seen all of them. Housing crisis of the 80s, the savings and banking loan crisis. He done seen all the ebbs and flows of the United States economy. But yeah, I do pay attention to what he's doing. And what he's saying is he lowered his percentage, his stake in Bank of America. He lowered his stake in Apple. Bank of America, you know how I feel about Bank of America as far as the bank. And then Apple is one of the best companies in the world. And he's been trimming his stake in those. Is one because he think that one is overvalued, Apple, or it's because he putting a lot of cash on the sidelines because he see an economic downturn that he's going to be able to buy a lot of the things that he already owns or other things that he want to own at a deep discounted price. That's the only reason why he's sitting in cash. He ain't sitting in cash because he's about to go buy a Malibu. You know, he's in his cash to make the next move. So yes, I think it's a big thing that people need to pay attention to. But everybody's gonna say he's old and don't know what he's doing. That's why I'm going to keep following this philosophy.
So, with him sitting on a big cash pile and also seeing that, he's been over the past, I think it was 2 quarters, he's been selling off shares. And I know I'm saying Warren Buffett, but it's Berkshire Hathaway.
Yeah, right.
Do you see, and I mean, we've already talked about this many times, but does when they start to sell shares, does this indicate that there is a downturn about to happen soon?
No, Warren Buffett believes in the philosophy, even though he don't say it, and I never accuse him of stealing my word. Uh, he's of the philosophy: be prepared, not surprised. Warren Buffett don't sit there and listen to the media and make his investment decisions off the media. He actually does the work. The same thing we talk about here. By the time you hear it in the news, it's too late. So they announced Warren Buffett sold off Bank of America, more Bank of America, and more Apple. He could have did that up to 3 months ago. He don't have to disclose until 3 months after he does it. So that's the thing. If you pay attention to the news and you see and you just realize that now Warren Buffett been trimming his shares 6, 8 months ago, and you still sitting in the stock and you was basing it off Warren Buffett, you're too late. You have to do the work yourself. But that's the mindset Warren Buffett prescribed to. He see how the hyper move in the stock market has been over the past 4 or 5 years. He's trimming. just to make sure he got the cash capital to take advantage of the next scenario where something comes underpriced. I mean, news just came out yesterday. The surge in foreclosures of commercial property is up 48%. 48% in foreclosures. That's not even counting the people that's hurting. And it's going to get worse. It's over almost $1 trillion of short-term commercial debt that's due next year. And these LPs and these people don't have the money to pay that lump sum of money. So he sees all that. But those are the different things that you're looking at. And the reason why he's scaling back on cash is to take advantage. He ain't scaling back on cash because he's scared. He's scaling back because he's playing his book. He wants to be prepared for when there's blood in the streets to take advantage of it. And I prescribe to that same thing. Like I told you, when the S&P 500 or the SPY got over 480, I trimmed back from my position and started building up cash. I ain't building up cash for shelter for my family. I'm building up cash to take advantage of the next thing moving. So I've been doing this since it went over, SP went over 480. He started doing it now. So I was on the same mindset because I wasn't looking at what the other big guys are doing. I was looking at, I started seeing cracks and leaks in the people around me, or the middle class and lower class. They didn't have money. That's what made me start doing it. And then I just been keeping an eye on that. So I just been like, okay, I'm just gonna store more cash. So I can just take advantage of a downturn. When the downturn will happen, I don't know. But a downturn will happen and I want to take advantage of it. So Alex, I mean, you seen the articles. I don't know how long you've been paying attention to him or what Warren Buffett been doing, but I know in the Discord we've been talking about that, piling up cash, getting ready. So what's your thoughts on it when you see him trimming? Do you think that he just think the stocks are overvalued, or
Yeah,
what?
I mean, from as much as we've discussed, and I mean, when I first met you, you gave me a lot of tips on Warren Buffett and insight on his strategies. A lot of my knowledge came from, you showing me his patterns. I remember that clearly when you first showed me the stock market, it was introducing me to, what Warren Buffett does, how his strategy is in the market. And so to me, seeing that he's trimming his position, to me is a very clear um, indicator that he's preparing for a downturn. I can only hope it's soon, and that's why I said, do you think it's soon? Because, it'd be great to jump into a market that's coming down and getting shares on companies that we know are valuable, but at a cheaper price. So I definitely see that, especially now that he's continuing to sell shares and it's not just like, oh, this was just a last quarter thing and he's just holding now. He's continuing to offload his positions, and it indicates to me that he is preparing for a downturn, as you said. So, and that's a huge position too. I think, yeah, 325 billion. Um, I mean, the amount of companies that can buy, I mean, even buy outright, if you think about on the stock market. So, it's very interesting. And I think that the market is extended. I think it's very extended, and especially paying attention just to the charts. Um, I think a couple years back we went over a guy that was a day trader who was showing the pattern of the S&P 500. I think this was right before 2022, and he was showing the trend line and stating that, I think the trend line had broken, and he said that there would be a bull run, but this indicates that the market is due to come down, but you could still take advantage of the bull run and make money off of the S&P 500, going up. And I think we're kind of in the same scenario, that, there's money to be made. We obviously see the market still going up. But I think that just the environment of the economy, as we spoke about, as you mentioned as well, that there are going to be harder times coming soon. And I think we're already starting to see pieces being sprinkled into the news that this is happening. So as you said, by the time that the news is constantly talking about this, I think it would be too late. But I think we can already see the signs now, and especially from depending on just a job standpoint, what job do you work at and what industry are you in, and paying attention to the customers that are in your industry. Like you pointed out to me, the customers in my industry and transportation and retail and stuff. There's not a lot of sales going on right now. And so it's very obvious that people are running out of money.
Right. And that's the thing. And so you see this a lot when they come out with the 13 Fs of what hedge funds guys are doing when they're buying and selling. Again, that's always when you find out, it's always after the fact. So I have a position in Apple because Warren Buffett is trimming his position in Apple. That don't mean I'm selling my position or trimming my position in Apple. So um, Warren Buffett's strategy is to build capital. So for the downturn, what I did is because I'm not as nimble as Warren Buffett. I mean, I'm not as uh let's be honest, I'm not as knowledgeable as he is of the whole micro or the economy. So what I started doing, what was this, about a year ago? I just started trimming the amount that I was investing, and then I was putting it in cash, putting it in cash, putting it in cash. The timing of when it's going to happen, I have no clue. I thought that this would have came down a long time ago, but I just been building cash. I'm not going to sit here and change my philosophy because I think the market is going to come down and be like, all right, the market keep going up. Let me just go throw all my money in there because it keep going up. No, it's buy blood, buy when there's blood in the streets, and be fearful when there's euphoria. And it's still euphoria, and I'm still fearful. I'm not going to stop investing in the market, but the percentage I invest in the market will be a lot less. Now, I'm not taking the extra cash that I'm sitting to the sideline and going to mess it off, party, clubbing, and doing all that other stupid stuff. It's just sitting there waiting to deploy. I don't know if the opportunity is going to come in residential real estate. I don't know if it's going to come in commercial real estate. I don't know if it's going to come in stock prices or equity prices taking a big downturn. But wherever it goes, I want to be able to, as people will call me lucky, I want to be able to be lucky to get in there. But the only way to get lucky is to be prepared when the opportunity comes. Because the opportunity comes, if you don't have no cash, you're screwed. If you don't have no capital to deploy, you might as well just went to the club. You might as well just did nothing. If you 100% invested and then the market come down and you have no capital to take advantage of the downturn, then you're screwed. Well, you're not screwed. You just won't be able to take advantage of the good time. But most money or most wealth is created during downturns, not when the market just keeps going higher and higher and higher. The money is made on the buy. So, and that's what I did. And I, like I said, I was just paying attention. I don't sit there and follow Warren Buffett word for word because again, I know that it is late information. I better obtain the knowledge to know when to start trimming my positions or scaling back on my investments so I can take advantage of the bad times. So that's really how I take it. Like I told you, when I bought Bank of America, when I started buying Bank of America, then Warren Buffett got the warrants for Bank of America. Of course, his position was way bigger than mine, but I got it at a better price. I got it at a better price. And that just gave me confirmation I was in the right mindset because I got it and then Warren Buffett was in it. And just because I'm in it like Apple, I'm in it, Warren Buffett starts selling it, he has his strategy. My strategy is, hey, just don't put as much money in it and then have cash inside. And then let's say Apple do come down. And then it comes down to a totally price where it's a straight sale and it's just super undervalued, then I could deploy the capital and get a bigger position in Apple. If the housing market crashes, then I could get properties pennies on the dollar or at a 40% discount of what it is today. Commercial properties, I could get them pennies on the dollar because there's going to be a lot of small and regional banks hurting because they're going to have bloated balance sheets with a lot of debt and properties that they can't offload or people don't want to buy because of the housing market situation with the interest rate. I want to be the guy that build these situations out. And then by having cash on the sideline, that give me the opportunity to do it.
That's a good strategy. Yeah, and I mean right now I think what I'm doing right now is putting contrib when I contribute to my brokerage account. I'm leaving it in cash and selling puts. So I'm selling puts at a price that I would like to, maybe acquire certain shares at, but it's a further price as well. But while, rather than just having cash sitting in a account doing nothing, I'd like to collect some premium on the back end. So I've been doing that, and um when I do see shares come down to a decent price, I acquire a few, but I'm pulling back on just dumping in because I'm hoping and expecting the market to come down. And like you said, I don't know when, but with everything that's going on right now, I don't want to be in the wrong position like we saw back in the financial crisis back in 2009. So if this is going to be an opportunity for me in my lifetime where, just happened to miss out on the 2009 one because I was 10 years old. But if this is going to be an opportunity, I want to strategize it well, but also still take advantage of money to be made in the market right now. With that being said, guys, if you have any questions or comments, let us know down below. Don't forget to like this video, share, subscribe, and we'll see you guys in the next one.